Welcome back, everybody, to Homestead Road Weekly News, your fast-paced look at what's moving the real estate world, especially right here across Minnesota. I'm Devin, and today is March 6th, 2026. Every week, we bring you the freshest housing headlines, market shifts, pricing trends, and buyer-seller realities, curated and explained so you don't have to read through 100 articles. We scan everything happening from Minnesota to Madison, Wisconsin, to the Tampa Bay area, so you know exactly what matters right now. And remember, if any of today's topics spark questions about selling your home the easy, stress-free way, you can always visit us at Homestead Road or head over to hsrrealestate.com. That way you'll see all of the inventory we have to sell and maybe one's the right fit for you or someone you know. All right, everybody, let's jump in. Minnesota Housing just delivered one of the most dramatic policy movements of 2026. The annual state housing tax credit program, a major engine behind income-restricted rental and ownership development across Minnesota, opened its funding portal last week. And can you say gone in 60 seconds? Holy smokes. What happened shocked even veteran developers. All $9.9 million available in 2026 tax credit funds were claimed in approximately 2 hours. This isn't a small shift. This is a seismic acceleration from last year when these credits took nearly 60 days to sell out. Developers, builders, nonprofits, and private investors were lined up digitally at 8 a.m., waiting to submit applications the moment the portal opened, and the lightning-fast sellout tells a clear story. Minnesota's affordable housing shortage is pushing the entire development community into overdrive. Cities like Minneapolis and St. Paul are years behind on housing inventory. Construction costs remain elevated, municipal processing timelines are slow and backlogged, and demand for income-restricted units is higher than ever. From teachers to nurses to families priced out of conventional rentals, this year's stampede for tax credit funding shows that builders are desperately trying to push more units to market, but funding just isn't keeping pace. Developers now estimate multi-year waiting lists for similar incentives, and some say that viable projects will stall without additional state support. But here's the homeowner angle. When new housing supply is frozen or delayed, the value of existing homes just continues to rise. Even older homes, homes needing repair, homes with deferred maintenance, and homes that typically struggle on the MLS, inventory pressure means homes of all conditions matter now more than ever. And buyers are widening their search criteria. So if you're thinking about selling a home in Minnesota, especially one needing repairs or updates, Homestead Road can make it a fast, fair offer and buy it completely as is. No showings, no cleaning, no contractors, no traffic through your home, no having to leave for showings. Learn more at homesteadroad.com and give us a call. Let's chat about your situation. Manufactured home parks, once the quiet backbone of naturally affordable housing, are becoming a policy flashpoint in Minnesota. Why? Because over the past 3 years, dozens of parks have been purchased by large out-of-state investment groups. And in many cases, the moment the sale closes, residents report sudden rent hikes, new lease structures, higher fees, or stricter community rules. Unlike apartment renters, manufactured home park residents often own the actual structure, sometimes for decades, but have no control over the land that it sits on. So when land rent jumps from $450 a month to $700 or more, families are suddenly in a bind. Moving a manufactured home can cost $10,000 to $20,000, and many homes physically just can't be moved at all. They're just not in the shape to take that move. The pressure is being felt statewide, from metro-adjacent communities like Bloomington and Roseville to outlying towns where these communities are often the last source of stable affordability. Now lawmakers are weighing major reforms. residents' right to purchase laws, eviction protections, transparency requirements for rent increases, longer advance notice windows for new lease terms, restrictions on fee stacking, charging for amenities that previously were included with lot rent. Industry experts warn that without a policy intervention, Minnesota could face a surge in housing instability among low-income seniors, veterans, and working families. And for the broader housing market, this matters because when affordability collapses in one segment, pressure quickly moves into older single-family homes, especially homes that need renovation. That directly impacts sellers statewide. In one of the most eye-catching luxury real estate moments of the year, the most expensive home currently for sale on Lake Minnetonka, a 20,000 square foot estate with multiple wings, private shoreline, resort-grade amenities, and architectural pedigree has undergone a major price reduction. Originally listed above $55 million, the estate has now been repositioned in the market with a significantly lower asking price. This is rare. Ultra-luxury homes just don't follow traditional pricing models or logic. These properties usually sell based on uniqueness, exclusivity, and global buyer interest, not comps. So when a price reduction like this hits a tier, analysts take notice. What's happening? What's changing? First, ultra-wealthy buyers in 2026 are unusually cautious. Even in hot markets like Wayzata, buyers don't want fully turnkey homes without multi-year renovation timelines. They're comparing estates in Minnesota to trophy homes in Florida, Colorado, and California, and most importantly, they're not rushing. Secondly, the market that exploded in 2023 to 2025 has finally matured. Buyers want transparency, realistic pricing, and value even at the highest levels. Third, and this affects all homeowners, today's buyers expect move-in ready quality. Whether your home is $5 million or $250,000 or $55 million, buyers gravitate towards updated kitchens, clean mechanical systems, modern layouts, and good maintenance records. When a Lake Minnetonka seller adjusts price by millions, it highlights the pressure sellers feel at all levels. Homes that need repairs, updates, or heavy renovation must be priced correctly or they sit. If your home needs updates, or you simply don't want to deal with the hassle of cleaning, staging, repairs, or even long listing timelines, Homestead Road will buy your home as is, on your timeline. Fast, easy, simple, stress-free offer at www.homesteadroad.com or visit our listings at hsrrealestate.com. Moving east over into Wisconsin, which continues to face one of the most competitive housing markets in the Midwest. The star of the story, Madison. Months of inventory recently clocked in at 0.8 months, one of the lowest in the entire country. That means if no new homes were listed, the entire Madison housing market could sell out in 24 days. This is an extreme seller's market territory. Buyers in Madison are making decisions fast, often in the first weekend. Homes in the $300,000 to $450,000 range, especially near the university and job centers, are seeing strong attendance at open houses and multiple offer conditions, even here in late winter. Cities like Milwaukee and Green Bay remain competitive, though more balanced compared to the Madison frenzy. Statewide, the median home price continues to rise due to lack of a new construction factor, aging housing stock, and steady demand from Illinois and Minnesota relocators. One major trend, homes needing light renovation, paint, flooring, kitchen, refreshes, lighting, are becoming very attractive again as buyers look for ways to break into the market. Investors are returning as well, targeting cash flow opportunities in markets where rent demand is very strong. For sellers, Wisconsin remains a high leverage environment, but repairs, staging, and show-ready conditions still matter, even during these low inventory cycles. Heading south, Florida's Tampa Bay region, including Tampa and St. Petersburg, is entering a new phase in 2026. After years of rapid price appreciation and intense competition, the market is now cooling into something resembling balance. Inventory is climbing month over month. Days on market are lengthening. Sellers who expected instant offers in 2025 are suddenly adjusting their pricing and strategies, improving their property's presentation. But the biggest story is buyer behavior. New data shows that nearly half of Tampa Bay homebuyers are now using AI-powered search and analysis tools. These tools compare neighborhoods, calculate price-to-rent ratios, estimate renovation ROI, flag below-market listings, and even forecast future appreciation patterns. As a result, buyers are asking smarter questions. They're spotting overpriced homes instantly. They're comparing 20-plus properties per hour, entering negotiations with data and not just emotion. Showing interest in older or imperfect homes they previously would have ignored, AI is bringing to the forefront. For sellers, this means the market is simultaneously more transparent and more competitive. Homes needing repairs or updates must be priced carefully or sold to a buyer willing to do some renovation. So if your Florida home needs updates, cleaning, repairs, or a full fresh start before selling, Homestead Road will buy it, as is, no stress, and in any condition. Start the simple process today. Visit us at homesteadroad.com and get your appointment now. Well, that wraps up the March 6th edition of Homestead Road Weekly News. Thanks again for visiting with me today. I appreciate you listening to us cover the biggest stories from Minnesota, Wisconsin, and Tampa Bay, all shaping 2026 housing landscape. I'm Devin Walton. We'll see you in the next episode.